Everyone has that story of the billionaire their second cousin married, or Bob's billionaire uncle in South Carolina, the racehorses, the Bentleys, the summer homes in the Hamptons. That's all great, but what I want to know about is the gold. The question of whether wealthy individuals hold gold is kind of a difficult one to get to the bottom of. You don't just show up at the country club and start asking around. And it's not something you can Google. You're going to get stories about what a great idea it is, but those stories are going to be followed by links to buy from the company that put out that story. You're going to have to cut those out. And then you're going to get stories about what a bad idea it is. And those stories, well, they're going to be followed by links to set up a trading account with the company that put out that story. You're going to have to cut that out too. And you're going to find people on both sides of this. You'll find examples of hedge fund billionaires who support gold, say like Ray Dalio, Paul Tudor Jones. And then you're going to find billionaires who don't. Warren Buffett, Mark Cuban. So who do you believe? Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. So I'm going to tell you what I found. I can't give you anything definitive here, but this is a topic that I've been looking into for a few years now, something I've been interested in. I'm going to start it off with that old recommendation that you should keep 5% of your portfolio in gold. I'm sure we've all heard that. Some people have said 10%. Some people have said it used to be 10%. Now it's 5%. The other 5% is crypto. I know, but what I'm trying to get at here is if that's a dated concept or not. And I hear it challenged more often than not, at least when you look outside the gold and silver fan base. I mean, here people are going to say 10% isn't enough. But I think you have to widen the lens if you want to hear from people who aren't just going to tell you what you want to hear. So I've talked with family wealth advisors. I've talked with a few financial advisors who work with, we'll call them high worth individuals. And I don't think that there's any one number. It's going to change over time. It's going to change depending on how much the person has. But there are a few common numbers that seem to pop up, and one of those numbers is 3%. Now, honestly, I would almost expect to hear no percent at this point. Financial advisors, they just have a bias towards certain assets, the type of assets that they can manage. So equities, mostly treasury products, and then private bankers, they're going to have cash, maybe money market accounts. So some of the 3%, it probably means gold ETFs and gold producers to them, the kinds of things that you can trade. But the few people that I've been able to talk to who I would say actually know what happens deeper in society, they mention physical gold on the list. Now, it's usually toward the end of the list, but it seems to always be there. Taking that a little bit further and looking at actual reports, there are a few of those that dive into actual details. And one of those comes from Knight Frank. Now, this is a real estate consultancy. It's a giant real estate consultancy. So there's going to be a little bit of bias, I imagine, but the data comes from private bankers and wealth advisors. They're not just asking their own agents. Knight Frank, they have 488 offices in 55 countries, 20,000 people handling $817 billion in real estate assets annually. So they have better resources to explore this topic than I do. I'm going to give them credit where it's due. Now, their report looks at individuals with a net worth of $30 million or more around the world. I'm going to link to it in the description if you want more detail, but according to the report, individuals' total wealth is split like this. 32% of total wealth, it's allocated to primary and secondary home value. I'm not going to put that on the list. The investable wealth, that is split 26% in equities, so stock ownership. 34% in commercial real estate, that's going to be things like direct ownership, funds, and REITs. 17% bonds, 9% private equity, also venture capital mixed in there. 7% is other. That's going to be things like art, cars, watches, any other collectible. 3% in gold. We have our first coincidence. Come back to that. And then 2% in crypto. And I suppose if you put crypto and gold together, you'd come up with that 5% traditional recommendation for your portfolio offset. So 3% gold's pretty low on the list, but if you were to jump down that same report, make it to page 43, again, links in the description, they rank asset classes for stability. Now, this doesn't go toward how much people have, but I think it's interesting, and again, it's in the same report. Gold is second, and that's according to a poll of high net worth individuals, people with a net worth of at least $1 million. So 3% is still going to seem low to some people, but if we were to quantify that a little bit, an individual with a net worth of $30 million, 68% of which is investable income, again, 32% was their primary or secondary home, 3% of the 68% would be $612,000 in gold. So call that somewhere around 330 ounces of gold. That's 10 times what I have on the table here. Still seem low? Well, maybe for someone who has a $30 million net worth, but we don't know how much cash one of those ultra high net worth individuals would have access to. I'm going to say that they probably have enough to cover most basic emergencies. Now, by the same math that I used to get to that 330 ounces in gold holdings, well, each individual is also going to have access to about $3.5 million in bonds that they could liquidate. That, of course, is in addition to any kind of cash they'd have. So a lot of the things that people might plan for, maybe they're not going to be problems held by most people in this study. Another thing to consider here is that an ultra high net worth individual, they might have access to investments and asset classes that some of us don't. The more capital you have, the sexier the investment opportunities that are out there. If you just look at commercial real estate properties, they have a high bar for entry. You can't just buy an office building like you can buy gold coins, just putting a little bit in when you have extra cash. Same goes for that other category. We saw 7%, those things like art and watches, cars, collectibles, whatever. Now, I would like to collect appreciable art and classic cars too, but Uncle Rick Chevelle or the local artist's take on dogs playing poker on velvet probably doesn't qualify. So one of the things I found interesting here is that report used 3%, a number that I've heard in person. Again, I'm taking out the information that originates from bullion dealers, from gold IRA managers, just going straight to a handful of private bankers, to money managers, to wealth advisors. 3%, that's the number that keeps coming up. Again, small sample size, just the people I'm talking to, and some of them have mentioned that 5% also. They've also mentioned that crypto has been eating into it. That Knight Frank study lines up with that too, with 2% going towards cryptocurrencies. So one more bit of anecdotal information here. I talked with two people well into the ultra high net worth category, one in his late 40s, one in his late 60s, and both of them said they have gold. Now, these are people who don't know about this channel, of course. If I was asking people who do know about it, it'd be like asking a bunch of ranchers if they have cows. These are casual questions. I just kind of snuck them in. I didn't go deep, of course, but the younger of the two said, yes, he has gold, but it isn't doing much right now. And I know for a fact he was pretty involved in the crypto craze, so he might be a little bit desensitized to what assets do as far as appreciation. The other one, the older of the two, simply said, of course. Earlier I mentioned that you can't just stroll through the players' room at the country club asking people if they hold any gold. You get thrown out on your ear. And that gets to another point. Physical gold is a non-transparent investment. It's not a common thing for people to be forthcoming about. Now, I know the two people I just mentioned well enough that I wasn't being weird asking, but normally people would intentionally downplay their holdings if they would admit to them at all. And I wonder if that plays into that study. I don't know if it matters if you're ultra high net worth or just high net worth. That latter, that's like 1 million to 30 million. Well, maybe that 5% is more accurate. It's hard to say. So this past week, I talked to a family wealth advisor, and he mentioned that 5% allocation for gold offhand. This isn't my advisor, it's just a friend, and I asked him if that 5% was pretty consistent. What he said was that the percentage tends to go down for ultra wealthy individuals. I forget what he called them, but I think he was talking about that same category, 30 million and up. And he said he wouldn't really know because the wealthiest individuals that he works with, they're harder to put into boxes. In other words, there's no way for him to come up with an average. So I just asked him if he would know if any of his clients are out back burying gold or they have a Scrooge McDuck room, and he just said he wouldn't put it past any of them. So that conversation is really what kicked off the idea for this video. This is something that I've looked into a lot over the past 10 years, and I'm almost surprised that those 5 and 3% figures are so consistent. Again, consistent outside the circle of people with something to sell you. A gold IRA manager, they're going to suggest that it should be a lot higher than 3 or 5%. They're going to tell you 10, 15, 20% more. And really that shouldn't be a surprise. But considering the first rule of gold ownership is typically don't talk about your gold ownership, Well, 3 to 5% is interesting, and to a certain extent, I wonder if it isn't actually higher, but regardless, it's worth noting that people who deal with wealth at a very high level, so sophisticated, wealthy individuals and families, are at least admitting to 3. So I need to get a note in here. 3 or 5%, that isn't meant to tell you where your portfolio allocation should be. It's not what I use. What keeps me curious about this angle on the topic isn't even necessarily how much I should have personally. I just don't really use percentages. I use scenarios and expenses. What's interesting to me is just what other people find normal. That normal people consider some percentage of gold holdings practical. It's not just a fringe thing. The people with the bunkers. Now, honestly, I'm not worried about whether or not what I'm doing is normal. It's simply a matter of liquidity. It's just logistics. The more people that want a thing, the easier it is to move if the need comes up. And probably the less of a weirdo I seem if I ask if your rich uncle has a Scrooge McDuck room. Well, let's call it good there. Let us know what you think about that 3 or 5% average for gold allocation. Does that seem accurate to you? Let us know. And then if you have any stories of people with the wild gold holdings, the rooms full of gold bars or the chests full of gold coins, well, I want to know about that too. I'd like to believe that's out there. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.